Friday, traders, and what an amazing week in markets. The good news is the US election has finally been and gone. And the good news on that election is that it ran smoothly. And we had a resounding victory, and that victory was to Trump. Now, we spoke at length about the trades to expect on a Trump victory, and every single one of those trades worked exceptionally well. So recapping exactly what those trades are and the market impact of that is, firstly, US bond yields. US bond yields has been the biggest story in markets now for the last 1.5 months. Trump's policies being inflationary with the tariffs, we expected US bond yields to continue trending higher. And this is exactly what happened. So US 10-year yields did trade above 4.4%. Now, on the back of those surging bond yields, another big theme in markets that we've been seeing is the stronger US dollar. And the US dollar did basically, against every currency, we saw big gains for the US dollar. And thirdly, Trump's policies being lowering corporate taxes, giving a sugar rush to the US economy. Equity traders and equity markets loved that, so we did see equity markets surge higher on the back of Trump's victory. Now, one of the things though is you don't see surging bond yields, surging US dollar associated with risk on or bullish markets. Generally, it weighs on risk, and you're not supposed to see equities rip higher as they have. But occasionally markets can disconnect, and obviously with the euphoria of the election and the Trump victory, seeing the equity markets higher with surging bond yields and surging US dollar, is not a big surprise. But you need those bond yields to eventually, go back down, and the dollar also to stop ripping faces off. So enter the Fed. So last night we did have a Fed meeting, and last night Powell did address the surging bond yields, and he actually downplayed it and put it down to a stronger US economy, a stronger US data, and he said that at the moment that would not influence policy. So markets love that. And he actually did get bond yields trade lower on the back of his comments. So we saw US 10-year yields come back off 4.4% and trade 10 basis points lower, back down towards 4.3%. And on the back of that, we did see the market sell US dollars aggressively across the board. And now, obviously, markets love that even more. Now that is definitely bullish, and equity markets took off again, and S&P and NASDAQ making new record highs. And S&P and NASDAQ now up almost 5% for the week. So I would suggest ending the week, there's probably, we'll continue being, trading this bullish narrative, but one of the things that we need to keep an eye on is bond yields. If they do reverse higher, no doubt at some stage that will impact on risk. Anyway, look, I hope you have a great end of week trading, and we will catch back with you early next week.